Good morning, good evening, good afternoon, wherever you're at, whatever time it is. Thank you for tapping in and welcome back to the Crypto Casuals community. I am Stubby,
I'm Kelly. Welcome back to the channel, Casuals.
and today we're just going to do another casual update. So let's get right into it.
All right, ladies and gentlemen, to recap what's happened over the past week. At the beginning of this week, which was April 8th, Bitcoin was retesting the 73K resistance, but it went up as high as 72K, and then it retested and bounced down, went on a steady drop. And as of April 13th, which was yesterday at the time of this recording, there was an attack by Iran in retaliation of Israel on Israel. And within an hour or 2 hours, or within hours of this news being heard, there was a $6,000 drop in Bitcoin's price. So there's actually no way to be sure that the price drop in Bitcoin is directly correlated to the attack in Iran, but it's possible.
And without getting too political here, one of the most common causes or interests in war is monetary gain. And what you see in this picture is that Bitcoin fixes this. With the things that are presented in this picture representing forms of war, Bitcoin prevents unnecessary spending and overextending monetary pressure, which in the long term will result in less war, potentially.
For example, in the US before 1971, the US monetary policy was on a gold standard, meaning that each dollar bill was backed by a corresponding amount of gold, which meant that if you had a dollar bill or any amount of dollar bills, it should be redeemable for a physical amount of gold. And with that being the case, dollar bills and what you could actually spend was tied to a somewhat finite number, not an infinite number. And that limited how long wars could actually be fought by countries because they basically had a finite spending. And that was changed after 1971 when the US came off of the gold standard and became strictly a debt base, meaning all they do is just print more money. But as the picture said, Bitcoin fixes this because this is a digital way that they can't take from us like they took gold. That will basically, in the long run, force them to be a lot more frugal in spending. And it would bring back some of these restraints to the monetary policy that gold enforced before.
What we'll see here is that Mr. 100 is back. And ladies and gentlemen, if you're not familiar with Mr. 100, this is an entity that we have referred to in previous episodes that we don't actually know who, they may be. It could be a corporation or a country or a group of ultra high net worth individuals or a group of corporations that's been buying up to 100 Bitcoin or even more daily. And what we see here is that they just bought another 200 Bitcoin today. And so at the time of recording, the amount of Bitcoin that Mr. 100 has purchased is valued at over $13.2 million. And this is one wallet purchasing this in one day.
Ladies and gentlemen, Mr. 100 is active. You can see not even just the recent 2 days, but you can see how often they buy 100 Bitcoin. Why is that?
And what we'll see here on this chart is a high time frame viewpoint on Bitcoin's price action. And we see that it's in a general uptrend. Over the course of the past week, we have seen a form of correction, but it's ultimately testing the high time frame uptrend line. And so as long as this trend line isn't broken, then the uptrend is actually still in progress. And for this projection, which is actually an analyst on Twitter who goes by Mahir, Bitcoin could be headed toward 115K on the next leg up if the uptrend stays intact.
If you'll look here, we have a chart by a known chartist in the crypto space by the name of Crypto Capo. And his prediction for Bitcoin in the near term using his WXY model. And the first leg of the model, we have W where he tracks the bottom and its rise up to X which is the near top, and he sees through the trend line that from X it'll be dropping down through the level of 58K potentially and hopping back up maybe in the next couple weeks. Over the course of the next couple casual updates, we can track and see what progress we're making on both sides of the argument. Are we more bullish or more bearish?
And obviously, ladies and gentlemen, none of this is financial advice, but in this chart, what you'll see is a more short-term projection, whereas in the last chart that we reviewed, it was a more long-term visualization. And so over the course of the next week or 2 weeks, what we should see is this chart play out completely. So we'll know if Bitcoin falls down to test the 57 to 58K range, and if it's able to recover and bounce back up, or if we continue to slide down. But ultimately, if we're able to stay above this range or bounce off of this range, we could potentially be headed toward the 75K level next, which could then, escalate into a higher level, later on down the year. Or if we were to break below the 58K range, we could potentially slide down to 48K or somewhere in that region.
And with that being said, ladies and gentlemen, that's the video. Don't forget to like, comment, and subscribe. And we'll be back with more for you guys next week.
Once again, of course, none of this was financial advice. Peace.
Peace.